Hi, everyone. Welcome to Jeff's World, the weekly 30-minute show where our goal is to help you make more informed investment decisions. At least we're going to try. We're going to cover some key opportunities and risks for investors, high developments around the world, like we always do. Big focus on tariffs today. And we're going to take your live questions from the chat on YouTube. So you can ask us what's on your mind at any time by entering it into the chat. And we'll get to those in a few minutes after we kind of share some of our latest insights around what's going on Friday, this weekend, and today. Obviously, we've got a lot to cover, but first, I've got a few required disclosures before we get started. Obviously, we don't know you personally, so we don't make personalized recommendations, but we do talk generally about the markets, about sectors, and about areas of investing we think are likely to perform well or poorly and why, but we don't provide a specific outlook for specific stocks. And things can and do change, so all the thoughts we share are subject to change as well. Had a number of changes already this morning. And of course, investing has risks, and international investing has unique risks like currency moves, so please keep all that in mind. And as is the case every week, I'm joined by Michelle Gibley and Heather O'Leary here on the global strategy team at Charles Schwab. Good morning, ladies.
Good morning, Jeff. Good morning, everybody.
Good morning, everybody. As typical, I will be watching the chat, so please go ahead and send your questions in, and we will get to those pretty early on in our show this week.
Yep. Yeah. Thanks, Heather, for keeping an eye on those. I'm going to kick off with just what I'm watching this week and then jump into some thoughts on the tariffs and then just open it up for broad discussion here on the team. So obviously, Trump's 25% tariffs on goods from Mexico and Canada were set to begin on Tuesday, just 5 minutes ago, 10 minutes ago. Delayed those tariffs on Mexico, pushed them back to March 1st. There was some talk about that before they were even rolled out on Friday. They were scheduled to go into place on Tuesday. Now they are not going to go into place on Tuesday. So to say the situation's fluid is an understatement. But Canada and China are still being targeted. Now, 25% tariff on Canada, all U.S. imports from Canada, and an additional 10% for all imports from China. This could increase prices for products from avocados to air conditioners and cars to crude oil. So interesting to see this take place now. The tariffs could weigh on the Mexican peso and the Canadian dollar. We're actually seeing the peso up now on the day after those tariffs were suspended. The Canadian dollar is still down a little bit, and that would drive up the U.S. dollar. The U.S. dollar is up 7% since the start of the fourth quarter against both. As of this weekend, against both the Canadian dollar and the Mexican peso. So at least some risk of tariffs were likely priced in there. The effects of the tariffs are going to vary pretty widely across industries. The production of autos is going to be pretty significantly affected. Gasoline, because of how much crude oil we get and from Canada, and groceries. We get a lot of grocery products from Mexico. The industry is likely to be most heavily impacted. I'll talk about more about that in a second, but let me talk about what else is going on this week. We get hundreds of earnings reports this week. We could see earnings guidance suspended in the very fluid situation with tariffs right now. But we'll have to see. On Tuesday, we're going to hear from Alphabet, and on Thursday from Amazon. Alphabet, of course, likely to face questions on AI development costs in light of DeepSeek's performance and much lower cost. On Thursday, we're going to hear from the Bank of England on interest rates. Interestingly, Trump has set aside the UK, saying he's got a very good relationship with Starmer, the new prime minister, a Labour Party prime minister in the UK, and isn't currently targeting the UK with any tariffs, hasn't announced any there. But the Bank of England is going to be meeting this week on Thursday on interest rates. 25 basis point rate cut expected. Two more on tap probably later this year, expected by the markets, even as policymakers confront a growing list of inflation threats there. And then at the end of this week, as is true the first Friday of every month at 8:30 a.m. on the East Coast, we get the U.S. employment report for the prior month. And economists are forecasting a gain in January of 158,000 jobs. That's following December's much larger increase of 256,000. The Fed has noted that a very solid job market and elevated inflation kept them from cutting rates last week. They may not be cutting rates this year. I want to focus mainly on tariffs today. We got some clarity about U.S. tariffs on other countries this past weekend. Let me give you a quick summary of what happened. So the U.S. has applied 25% import tariffs on products from Canada and is delaying that on Mexico. Maybe it happens, maybe it doesn't, but as of this morning, they're going to delay those. Canadian energy is going to be tariffed at 10%. President Trump noting the potential increase in inflation there and wanted to mitigate that by only putting a 10% tariff on energy. China, let me just say that about a third of our imports from Canada are energy. In fact, outside of energy, we have a trade surplus with Canada, interestingly. China also saw a 10% U.S. import tariff applied. In retaliation, Canada and Mexico did talk about applying tariffs to many of their U.S. imports. Canada has listed some of those. Mexico has not and may not now that they're working on a deal with the Trump administration. My math, based on the latest 12 months worth of imports from those countries, would put the rise in the weighted average U.S. import tariff, if all these were ultimately implemented, including the Mexican tariffs in March, we'd go from about 2.6% weighted average import tariff to 10.5. This is a chart that I put together just kind of show you where we are now. You are here. This would be the highest level since the Great Depression era of the 1930s. You can see it in this chart here, just where we are from where we were, the Trump 1.0 tariffs, that little bump up, and then now, of course, the potential here for all the tariffs that Trump talked about on the campaign trail, bringing tariffs way up there to 26%. We're on a path to that here, looking at about 10.5% if I do the math. And all these tariffs were implemented. So certainly a very significant, very big amount of tariffs, very serious situation here, and why the market has reacted as it did, and now rebounded a little bit this morning on the idea that some of those tariffs will be delayed. Many thought this ultimately wouldn't happen, despite all the campaign threats, given the history of similar threats during Trump's first term and their potential inflationary impact. In fact, we published our top 5 surprises for 2025, like a month ago, and I had the top surprise as tariffs coming big and early, but also going quickly after the point was dramatically made. So far, yeah, maybe that's playing out, right? We got huge big tariff announcement, and then actually the day before they're being implemented, getting pulled back, at least as it relates to Mexico. Look, I don't know they're all going to go away quickly. There could be more coming. President Trump did promise higher tariffs if the countries retaliated, and Canada is doing that. He also said tariffs on Europe are coming, although those can be more targeted, as he specifically has called out autos and agriculture, and he suggested they could just buy more U.S. energy to avert those tariffs. It's hard to see what causes Trump to back down. It was interesting this morning what the deal that Mexico made with Trump, pretty minor, 10,000 more National Guard troops to patrol the border. They've been doing that. They've been ramping up their border enforcement. Seems like a pretty easy deal. It could have been done weeks ago. So kind of interesting to see that was what caused Trump to delay. The U.S., as I mentioned, actually has a trade surplus with Canada when we exclude oil, and relatively few migrants or drugs are coming across the Canadian border, according to data from U.S. Customs and Border Protection. Illegal crossings from Canada are about 3,000 a month, and they're 50,000 a month from Mexico over the past year. If you look at fentanyl, I think it was 20 kilos of fentanyl came in from Canada, according to the Department of Homeland Security. Nearly 10,000 kilos coming in from Mexico. So just totally different order of magnitude between Canada and Mexico. So not sure what would cause Trump to back down on Canada. Quickly, let me go through what the impact on Canada and Mexico is. The dependence on exports to the U.S. for those two countries likely means a risk of recession the longer they last. In fact, Mexico's GDP was negative in Q4. So were these tariffs not delayed, the country would probably be in a recession if we define it as 2 quarters of negative GDP back to back. Further rate cuts are likely in Canada, but that's complicated by the pressure on the currency from the tariffs. Now, we often say the stock market isn't the economy, and that's true here as well. It's worth noting that a lot of Mexican businesses that have large U.S. sales, those sales come from operations in the U.S. They aren't subject to the tariffs. For example, Cemex, big, 6th largest stock in the MSCI Mexico Index, they don't really export to the U.S. They actually operate in the U.S. So they have a lot of U.S. sales, but their operations are here. They don't cross a border, so they wouldn't be subject to those tariffs. While a lot of U.S. businesses that have substantial Mexican operations, like General Motors, will be subject to them. In fact, 4 of the top 5 Mexican stocks that make up more than 50% of the MSCI Mexico index will not be directly affected by the tariffs. One's a bank, one's the Latin American Coca-Cola distributor. They distribute Coca-Cola within Latin America. You've got a telecom provider and Mexican Walmart. So only the mining company Grupo Mexico is the one that will be directly affected. So that can help account for why the Mexican stock market is still up 2.5% so far this year through this morning, measured in US dollars, outperforming the S&P 500. So let me just pause there. Some investment takeaways that we can get into a little further. But I want to open up, Michelle, I know you've got a lot of thoughts on all this and maybe even some thoughts here this morning on what we saw and maybe why we saw what we saw unfold with Mexico.
Yeah, I would say that the news has been pretty fast over the last couple of days. And, if we think back just to Thursday and Friday, maybe it was Wednesday, President Sheinbaum was saying that she didn't think that the tariffs are going to come in place. And then on Friday, I think there was a report from Reuters that the tariffs would be delayed till March 1st. And then Trump came out and said, no, they're going to be tomorrow. And it's like, Trump really kind of needs a win here. And so maybe the tariffs being delayed to March 1st what was actually true, but now he gets to kind of see a win because he put them in place or at least announced them. And now, at least for Mexico, they're being delayed a month. As you said, just 10,000 police force added to the border. I would note, I'm looking at the transcripts here. Sheinbaum is still talking and she's saying that for the first time, the U.S. is willing to work toward curbing the flow of guns and other high-powered weapons south into the Mexico. I don't think that's going to help her case. It's been interesting, and we haven't heard about Canada yet.
No, we haven't, and Canada seems more set to push back. And I don't know. Obviously, there's an election coming up in Canada, and likely this summer, and so we'll see how that plays into this sort of positioning here between Canada and the U.S. Obviously, a deeper downturn Canada would not bode well for already Trudeau's party, which is really suffering in the polls. So we'll see what happens. Interesting to see maybe Trump sort of gets to show that he was quite serious about tariffs by announcing them, saying that they're going to be coming in 2 days, but then suspending them for a month on Mexico. We'll see what happens with the rest of these. But very interesting. The peso has fallen since the start of Q4 in anticipation of all of this by an amount that seems reasonable given the amount of the tariff. So both, as I mentioned, the Canadian dollar and the Mexican peso down 7% leading into all of this. So some of that obviously already reflecting some of the risk here. As a signal for what to expect in stocks, it's interesting. So we've seen a bit of a rebound this morning on the Mexico news. U.S. stocks fell 0.5% on Friday. The S&P 500. Mexican stocks in US dollars fell 2.6%, understandably, and Canadian stocks fell 1%. And the iShares China ETF, and I bring that up because China's markets weren't open to Lunar New Year, that fell 2%. So all of them fell. But the MSCI EAFE index, which is generally what we talk about when we talk about international developed markets, doesn't contain Mexico, doesn't contain Canada, China, or the US, fell just 0.1% on Friday, and it's outperforming the markets again today. So certainly more downside maybe in store for equities given the uncertainty. Michelle, you and I have talked about maybe the uncertainty around trade even being maybe more negative than the actual tariffs themselves. But EAFE might offer a relative safe haven. It doesn't contain any of these first-round combatants in the Trump 2.0 trade war. So we'll have to see how that fares today and over the remainder of this week. But again, might be some downside there, but relative safety we've seen here the last couple of days relative to those countries that have been targeted.
Yeah, one thing about uncertainty, the question is whether the uncertainty over the policies, and they're on again, off again, they're delayed, they're targeted, is whether or not businesses will pause investment and hiring until we get more clarity. We know that there's a global measure of uncertainty, and it was already rising before the announcements over the weekend. And if we look back to 2018, 2019, uncertainty about tariffs slowed business investment in manufacturing, according to transcripts from the Fed, and also reduced real income and, of course, resulted in importers paying tariffs to the US government. And there was a question in the chat about inflation. And the thing is, there's still a lot that we don't know yet in terms of how long these will be in place, what if they'll be changed to targeted goods. And also, we don't know the demand impact. The assumption is that higher prices mean inflation, but and for some goods, like let's say luxury cars or handbags, demand is relatively inelastic, so it doesn't really change much if the price increases. But other goods, price increase could curb demand. And we also don't know if companies are going to pass through higher prices like we've seen in recent years, but they've been getting some pushback from consumers. So maybe they will absorb the higher prices.
A lot of this,
Yeah.
Michelle, though, they're commodities in many cases. So, right, so when you talk about inelastic goods, you're talking about sort of very highly, produced luxury goods. But when you talk about fruits and vegetables, and you talk about, gasoline, oil, those are things that can flow through fairly quickly on an inflationary picture. It doesn't take long for them to get embedded in and have some impact. And it's not like where you can just, okay, I'm not going to buy as many apples. I'm going to buy more oranges. It's across the board in terms of groceries, and we see the same thing again with energy prices. It's hard to avoid that. So and the currency impact. Obviously currencies adjust. And we've talked before on this show about how it's not a one for one, right? So when you apply tariffs, generally that country's currency goes up in theory to offset much of the tariff impact. But in this case, you may only see, like, if you see a 25% tariff, we've seen a 7% currency move. So that offsets some of it, but not all of it. So there's certainly some potential inflationary consequences here. We don't know how much and we don't know where, but it is interesting, just given the backlash to inflation we saw with all the elections across 2024, to be tempting a return of inflation here is a pretty risky move.
One other thing I'd say is that this is a fluid situation, and investors or traders trying to trade every announcement, I think it's very difficult, and it might be a good idea to just maybe take a pause and try to take a longer term view here.
Yeah, there's certainly a lot of volatility. One other sort of news item that came out this morning that's sort of adding to the noise in the market is that there was a big country, that cut tariffs today, basically. Tell us more about that.
Yeah, I'm pulling it up here. So they cut import taxes. India has one of the highest tariffs around the world. So we had actually thought that this could be a trade war, could benefit India because they could use the situation to lower their tariffs, and that they did over the weekend. So they cut it on a wide range of goods, synthetic flavoring essences used in food and drink to 20% from 100%, decreased it on consumer electronics, motorcycles, telecom equipment. And so this could be good. And maybe they're using this occasion to say, hey, not us.
Yeah, well, so you brought this up before that, hey, India could basically say, really de-escalate any kind of trade war with the U.S. by preemptively lowering tariffs. Boom, they did. You're right about that. And then secondarily, this has really boosted their economy because a lot of these things they lowered tariffs on are inputs to their manufacturing process. And so, India is trying to grow its manufacturing business. It's generally known as a service-oriented economy, but it's moving into manufacturing. And to really make a big difference there, you want to lower those costs. And so you can do that by lowering the import tariffs for a lot of these inputs like batteries and so many other things, the electronics that go into manufacturing. So this is actually a boost to their domestic industries as well. Their GDP had slowed a little bit. They've been doing 7% or even 8% a year in terms of GDP growth. They'd slowed about 6.5%. This could reaccelerate that. So good news for India this morning on this, but just sort of a country here going in the other direction here and actually lowering tariffs to boost growth. Interesting take.
Now, Jeff, we do have a question actually about the level of tariffs in Europe. Would we expect a similar response? Maybe they're kind of lowering things around to sort of avoid being the focus of Trump tariffs going forward.
Yeah, I think that there's some give or take there, but it's hard to say. So for autos has been brought up again and again and again. And Peter Navarro talks a lot about how Europe charges 10% tariffs on imported U.S. vehicles, U.S. autos. And in the U.S., cars, we only charge 2.5% tariff on European autos. And Trump sees that as being very unfair, and perhaps it is. But what's not mentioned is the U.S. charges a 25% tariff on European trucks coming into the U.S. And we buy more trucks than we do cars in the U.S. So, and that includes SUVs and all of that. So actually, if you look at the distribution of the tariffs on overall autos, cars, and passenger trucks, we actually have a bigger tariff on European vehicles than Europeans do on us, just based on how the sales break down. But there's a give or take there. There's certainly some things that could change. I would say that more likely we would see Europe try and close the trade gap, not get into these issues of this tariff's here, that tariff's there, and negotiate every single tariff level, but go in and say, look, agreed, we have a big trade gap with the U.S. Let's narrow that by buying more U.S. energy. Obviously, Europe had been dependent on Russia for so long. They pulled themselves off of Russia. They could use more U.S. LNG and other energy sources. The U.S. would have to produce more in order to do that, but it seems to be part of the administration's plan to do so. So I would see maybe a more likely narrowing of the trade gap rather than narrowing of the tariffs that are in place. Certainly there's some room on tariffs, but there's probably more room to move on narrowing the overall trade deficit. Europe could buy more U.S. weapons and ammunition to aid in their war, the conflict there, although if there's a ceasefire, maybe they don't need it. But I think in general, ramping up defense is a priority for Europe. And to do that, they need a lot more weapons and the like. They can buy those from the U.S. They can buy more energy from the U.S. and help narrow that trade gap. That could be a deal that gets done with the Trump administration that averts more significant tariffs. And maybe we just see, maybe a little bit of a move up in agricultural tariffs or on auto tariffs, and not an across the board move like we saw announced with Canada or Mexico or China.
One other area that we haven't seen yet is much for China. We got 10% over the weekend, but that's a lot lower than the 60% initially threatened. And I think we're just still in a longer negotiation here. We've already got this ban on TikTok being delayed, and maybe there are areas that behind the scenes they're still working on. What do you think, Jeff?
Yeah, you make a good point, and that's why, again, to get back to your early point, that there are going to be data points, news flow on this that come and go and come and go, and it looks, we'll take big steps forward and then big steps back. I think a period of volatility is ahead of us here. I talked about how this very, very calm transitional period from election day to inauguration day was really going to probably belie what we were going to see in the first few weeks of the Trump administration. Again, we talked about the potential for big tariffs coming and then going, and just a lot of volatile news flow. And again, with China, yeah, you point out we're likely to see some of that. So certainly there's been developments on the TikTok front, developments on semiconductors, 10% tariff, very different than the 60% tariff that was threatened. So we'll have to see what the give or take is there. It seems like there's a lot of back channel communication going on between Xi Jinping and President Trump as opposed to in the papers, and that's probably a good thing to getting a deal done, but we'll have to see. Certainly, there's more to come on all of these fronts as it relates to trade. I mean, Trump, I think, really believes the tariffs are the most effective way to bring people to the table, to get deals done on other things. I've talked before about how it's maybe more statecraft than economic policy. Certainly, that's been true so far here for Mexico and Mexico's relationship with the U.S., but we'll have to see. Heather, what other questions do we have coming in?
Well, actually, just to that point, we looked at tariffs a lot during Trump's first term. And the fact remains, yes, tariffs were largely a tool of statecraft, bringing people to the table. Is there any difference this time around? All right, he actually implemented some this time. Are we going to see him back off and remove them like we did in Mexico, or is he playing by a slightly different rule?
Well, and that's where we don't know. Clearly, I think we all expected Trump 2.0 would be a little different than 1.0. Heather, you put together a table which we've shared many times that shows all of the Trump 1.0 tariff announcement days netted out to a 0.0 change in the market. That basically there were some days that were up, some days that were down. Overall, the market did not react dramatically at all to tariff announcements during Trump's 1.0, primarily targeted on China at the time, and not only China, but mainly China at the time. And we just really didn't see the market move in a big way. The idea was that, well, these are negotiations and ultimately won't derail trade. And in fact, they didn't. I mean, U.S. trade with China is still about the same as it was prior to Trump's first term in terms of the value amount of that trade, the percentage of overall U.S. trade. And so they really didn't have a big impact. Trump 2.0 clearly looking to make a bigger impact, or seemingly on the surface, very difficult to say. I think anyone who says they know for sure what's going to happen is probably underestimating the range of possibilities here. And that's why, again, our number one surprise for the year was we highlighted around these tariffs being bigger and earlier in Trump's administration than many expected.
That seems to be fair. The one thing that I did want to point out is we did look at the MSCI World Index, and we looked at those companies in that index that had a high percentage of foreign sales and contrasted them with those companies that had zero or very low, less than 5% foreign sales on average. It looks like that companies, once they have some sort of visibility on policy, they're able to adjust their sales, adjust their expenses, shift their economic strategy in response to that, largely making the performance of the constituents in both those categories roughly perform approximately the same.
Yeah, let me summarize what you just said there. So basically, companies in the MSCI World Index, 2/3 of those are U.S. companies that have a lot of international sales performed exactly the same as those that have almost no international sales. Basically, if you're, whatever industry you're in, you pretty much move like that industry, even if you sell a lot overseas versus domestically. That was during, the Trump 1.0 tariffs. Now, again, things could change a little bit here, but we talked a little bit about why they might not, right? We talked about even in Mexico, where 4 of the 5 biggest stocks in the Mexican stock market really have no exposure to the direct exposure to these tariffs. And even those that do have substantial sales in the U.S., they manufacture in the U.S. Because Cemex. I mean, it's cement. You don't want to move that stuff. So you operate in the U.S. So the result is that's why you'll see that maybe not as much crosses a border as you might think as it relates to some of this stuff. But clearly there are implications there. But one of the reasons why we're seeing stocks now down. So the S&P is down 70 basis points today. Emerging market stocks only down 25 basis points today. Just looking at the ETF. Really fairly mild reaction to all of this. There was some reaction on Friday, but fairly mild reaction today, again, because I think the market's expecting deals will get done and companies, as you point out, Heather, can find ways around these things, either shifting their operations or generally are just not directly affected.
That's right. What about companies or countries that have not yet been targeted for tariffs? How's it going to the effect on their currencies and their markets? For example, we could talk about Japan a little bit and the Japanese yen actually increasing in strength for this year.
Yeah, so we'll see what happens with Japan. Japan, obviously, another huge export-oriented economy with cars and electronics. We'll see. Just hasn't been mentioned by Trump. Taiwan. Here's another one where obviously lots of exports to the U.S. Critical for U.S. technology infrastructure, not targeted. So we'll see what happens with some of these countries. It's interesting to see where the focus is. Again, Peter Navarro in his latest book really going after Europe, Germany, particularly on autos. So I do expect some action on autos with among countries and areas, the industries that haven't been targeted yet, but really haven't heard much about Japan or other Asian countries as well. Remember, some of these Asian countries actually are getting Chinese products and then passing them on to the U.S. Cambodia, Vietnam, among those, really not being singled out here by the Trump administration either. So they may just be under the radar and just not getting the attention, or they may pop up by surprise. But it is something else to keep an eye on. Definitely a fluid situation.
I guess for our last question, we'll talk about, flying under the radar. We have a question about DeepSpeak. So far, they've been able to accomplish things that other US-based AI people have done for supposedly less costs. And one of the rumors is they may be acquiring NVIDIA chips that officially aren't accessible to them. what is the expectation going forward for the AI as a whole?
But, Michelle, you want to take that?
Yeah, I think there's a lot we still don't know about DeepSeek, but I think it does illustrate the power of innovation, particularly when resources are constrained. Even if they did get NVIDIA chips, in a way they shouldn't have, there were still some innovative things that they did. And policymakers in China know that the old model of building infrastructure and manufacturing is no longer, it no longer works to propel growth. So they're putting more money in R&D, and we're likely to see more innovations there. For Chinese stocks, we're still waiting to hear about any kind of fiscal support, and we may not hear that until March.
Yeah, I'll just quickly add in that the idea that you're just throwing more hardware at the problem of AI is now about maybe we can make better trained models, and that's certainly a change. And one of the things that maybe questions or threatens the leadership of NVIDIA. We've pointed out many times on this show that there is no U.S. exceptionalism without NVIDIA. Without NVIDIA, European stocks are outperforming the S&P 500. The MSCI EMU, the European Monetary Union Index, is outperforming the S&P 500 in this entire bull market since it began, if you take out NVIDIA. So very important to determine whether the U.S. outperforms or not, what happens with NVIDIA. Now that there's some questions about how necessary high-end hardware is in this AI training going forward, certainly it maybe offers some broader performance in the markets. We've seen financials and energy outperform technology lately. We'll see if that's sustained. All right. Thanks for all your questions. Thanks, Heather. Thanks, Michelle. And our producers, Andrew and Gabe, and everyone for the questions and joining us. Tune in each week at 11 a.m. Eastern or catch the replay on YouTube. Also, be sure to click like on the show and share your comments on what you're watching in the markets, and we'll see you next week.